Welcome to the Patrick Real Estate Show, where we explore the fascinating world of real estate investing with your host, Patrick Switek. Patrick is a dynamic young entrepreneur and an accomplished real estate investor who's passionate about helping others achieve financial freedom. Each week, we sit down with some of the most inspiring individuals in the real estate industry and delve into their personal journeys, lessons learned, and secrets to their success. Let's dive into this week's episode.
Everybody, welcome to the Patrick Real Estate Show. Today we have Nick Massey here with me, and I'm super excited to get into his story and to educate everybody more on insurance. I know it's not the most sexy topic ever, and we've talked about this a lot, but Nick, if anybody can make it sexy, it's Nick, okay? I'm just really excited to dive all things insurance. He's the CSO of Chief Sales Officer of Proper Insurance. They have multiple divisions. They have Proper Insurance where they take care of your property, making sure the property insurance is there for the short-term rental. They do property management insurance as well, which is a new product they launched with Worcester. And they do Wavo as well. So that's per booking insurance. And he's going to talk all things insurance today. And he's been super insightful to me and even the mastermind group. He's been super helpful in being able to help a lot of us with understanding insurance, because really not every insurance is the same. And realizing sometimes that your insurance policy doesn't really cover what you need. And it's an important thing. If the pipes break and your place gets flooded, you want to make sure you have insurance, and insurance that covers you really well. Without further ado, Nick, welcome to the show.
Yeah, thanks for having me, Patrick. Yeah, like you said, insurance is not a topic people want to spend time on, but the issue is insurance has always been talk to an agent. You don't need to understand everything. Just buy a policy and hopefully you never have to use it. You know, when we deal with short-term rentals, these are our babies. Blood, sweat, and tears, financial commitment, spending so much time to get to a point where you can buy a second property and then try to expand that portfolio. So Proper came out and said, let's do this different. Let's write a policy that's going to cover more things than anybody else out there. Let's take real specific care in how we address the liability components, the property damage components, as well as lost business revenue when these properties are shut down. And it's our job, and a big part of my job is to come on to shows like this and really simplify it for everybody, explain how, really finding the right partner in your risk management strategies is just as important as furnishing and design and pricing, and how do you make your website stand out? How do you make your individual properties stand out so that you can generate the most amount of revenue? Hopefully we can dive into some of those details and more coverage kind of specifics. As you mentioned too, Worcester, our property manager product, and Wavo, the damage waiver product. And so we can encapsulate everything for the individual host as well as the property manager here under one roof.
Yeah, absolutely. But Nick, before we even get into all that juicy details, do you mind giving us a little background on you? Like, how do you got back in this industry? What's your insurance background, all that?
Yeah, so I started my insurance background in estate planning, property preservation for farmers and ranchers out here in Montana, where I'm at. And so that's a lot of stuff around commercial products. You got to insure the land. You got farmers and ranchers who have tons of equipment, lots of buildings, generational wealth that needs to be passed down and protected. So a lot of life insurance stuff, annuitized products, investment strategies, stuff like that. And then, like everybody in this industry, I just stumbled into it about 10 years ago. Proper was getting off its feet. I was traveling all over the state. I was starting a family. I didn't want to live in motels for the foreseeable future every day of the week. So took a chance, fell in love with the industry right away and the clientele, and was able to bring a lot of that kind of estate planning, preservation kind of experience into what Proper's doing, and really mold the sales team and how we go about this and the educational format in the same way I did it with the estate planning with these farmers and ranchers. So that's how I got into the industry, and yeah, been in for coming up on 10 years now. Enjoyed every minute of it.
Dude, Nick, I think one thing you mentioned to me once, because Nick and I, Proper has been sponsoring the conferences for 3 years. and Nick comes every time. And so obviously we got to know each other pretty well. I think one thing you mentioned to me that really stuck out to me more than anything was you're not even in the sales game, you're in the education game. And that's the thing with this product, right? People don't really understand the nuances. So I think that was really interesting when you said that.
Yeah, definitely. I think a better title for me would be Chief Education Officer, but CEO was already taken. So we'll stick with the Chief Sales Officer. But yeah, our primary goal here is at the end of the day, sure, we make money, we keep the lights on by selling insurance product 100%. But we'd rather take the approach of education and lay that out all out on the table for the manager and the individual property owner and show them where these nuances in risk management come and how we can help be a better partner in that for the longevity of your business. And then you get to make the decision. We're not going to sit here and cram this down your throat and say you have to. Let's put it all on the table. Let's simplify it as much as we possibly can. Let's spend 30 minutes or more on the phone and talk about this stuff. Let's review what your current insurance is and what it is not, more importantly, where things are missing, what your concerns are, what amenities you're providing, how you market the property, go on and on about it, and then present you the product built for you. And if it works, then we'd love to be a partner in your business. If you don't think it works or you're comfortable where you're at, perfect. At least we had time to go through it and help educate you a lot more on where gaps may be present so you can plan for that in the future if it ever comes up.
Yeah. And Nick, just to go into the basis of insurance just real quick, the way that insurance works, and correct me if I'm wrong, is the idea of the insurer is taking a risk in the sense that they hope they collect enough premium to pay for themselves, right? Like sustain themselves and be a profitable business. But also they take on the risk that if something happens, they have to allocate depending on the risk assessment for each of those things, right? So sometimes when you pay more for insurance, that actually is not only just a higher profit margin for you guys, it's more so you guys cover more when you pay more for insurance. Is that correct?
Yeah, so the basic fundamental of insurance is transactional risk transfer. So it's a process of how much risk is the insurer taking on and how much premium are they willing to collect to take the gamble on that, right? So the insurer or the underwriter, in our case, Lloyd's of London or Concert Specialty, you can think State Farm, Allstate, Nationwide as well in that category. Are they going to take $1,000, $2,000, $10,000, $100,000 in premium on the gamble that they're not going to have to pay a claim? Versus you are paying that money saying, I'm likely, more than likely in the next 5 to 10 years, going to have to engage my insurance contract and I should get more back than what I've paid in premium. So that's the risk transfer equation behind it. So in theory, and this theory is correct 98% of the time, the more you pay in insurance generally means the more coverage you have. And it's not the limit of insurance, it's exclusions. Do I have fewer exclusions or more exclusions? So a quick example of how an insurance company like Lloyd's of London or State Farm or Allstate or Nationwide will control premium as well as control loss is to put in limitations in the policy. So instead of getting huge rate increases that they have to put out there for you, Patrick, to have the same coverage you had last year, they'll come in and restrict coverage. So they might put a water damage limit in. So instead of having $500,000 in water damage coverage to cover your entire structure, you only have $25,000 now. But that trade-off in risk, Patrick is now paying less in premium, but you're taking on more risk yourself out of your own pocket.
Gotcha. And so the reason I bring that up, Nick, is because I'm just going to lay it out there for you. I'm sure you've heard of this, but property usually comes in sometimes comes in a lot higher in some markets. And people have definitely seen something like that where property insurance is higher. I'm assuming that's because you guys cover way more. Can you maybe explain a little bit about that realization? Like, wow, why is this coming in maybe 20, 30% more than this other insurance coverage that doesn't understand short-term rentals, for example?
Yeah, so there's a couple of things we want to put into the equation, right? One, do you have just the complete wrong insurance policy already? So a lot of folks that come to us, they're operating with a typical, your standard run-of-the-mill homeowner's insurance policy, and it's on a second home, or it used to be your primary residence. You bought another property to move into, and now you're using that first home that you lived in as a short-term rental, but you never changed your insurance. So you may only be paying $1,000, $1,500, $2,000 a year for that policy, which is pretty standard for a homeowner's product on your average home across the U.S. So then you come to us and you get a quote, and I'm $4,000. And that's when we really need to dive in from the start and go, you have a homeowner's policy to begin with, which is meant for your primary residence. You live there full time, right? If you slip down the stairs, you're not going to sue yourself. It has very limited liability coverage. They're limited in all other aspects because you live there. You're going to prevent stuff from happening to your home. It also has a business activity exclusion, which states if you make more than, some contracts say $2,000, some say $2,500, but essentially if you make more than $2,000 a year in part-time, full-time, or occasional income from the property, it's a business and your entire contract is now void. So you're in the wrong playing field to begin with, and we need to start looking at more comparable contracts and other options that are out there. So when you move up a level, you start getting a little bit closer in price. It's the coverage limitations is a big part of it. The number one fear that we hear from everybody is damage caused by a guest. Malicious and intentional damage is excluded in all insurance. Proper, and there's one other company, we don't have an exclusion for it. So that's a trade-off where you're going to pay a little bit more in premium. We can talk about amenities. We're going to cover $1 million in liability, while a competitor might only cover $500,000. We're going to cover liability off the property line, where my competitor is going to restrict your liability coverage to property line only. So those are differences in coverage product, not the limit of insurance, but just what is and what is not covered, that relates into a higher premium, but also relates into a stronger coverage product for your business as well.
Yeah. So curious, is there an ability for people that maybe look at proper and say, I don't want $1 million of coverage for amenities and I'd rather have $250,000? Are you guys open to working with people where they adjust the policy, or are you just one size fits all kind of thing?
So the new standard in the legal side is $1 million. It's not what it used to be. So we don't go down in our limit of insurance. So the kind of basic starting points of liability is $300,000, $500,000, and $1 million. $500,000 is okay, but again, it depends on what you have going on. $300,000 is not enough. That's why on your regular home and auto insurance, your agent probably talked you into buying $1 million umbrella to get you there. So we start at $1 million. We can go up to $2 million per occurrence without the need to buy an additional umbrella on the proper product. So some folks with a higher value home or more amenities, maybe they're lakefront, waterfront in some capacity, canoes, kayaks, swimming pools, pet friendly. They want to have that higher level of liability protection. So we don't go down. $1 million is typically what's required for city permitting. $1 million is typically what a property manager is going to require in their contract. So let's just start at $1 million and go from there and see if you need more or not.
Perfect. Cool. And this proper insurance is the bread and butter. Now, curious, what are some of the things in proper insurance like that you've seen throughout your time that maybe homeowners make a mistake in choosing maybe the wrong provider, but also the wrong coverage? What are some of the things that you see time and time again that you'd want people to know about?
Yeah, the most common one is the largest insurers for short-term rentals. It's what's called a landlord product. So build this real quick. You have 3 types of insurance products you can buy as a property owner. You have a homeowner's policy, which is meant for your primary residence. That type of coverage should not be on anything other than your primary home. You have what's called a dwelling fire policy, or common vernacular is a landlord policy. So that's for a second, third, fourth, fifth, sixth, however many homes you own. And they're initially built for rental as a residence. And then you have a commercial type product, which is custom built around whatever business that you're operating. So Patrick, if I owned a coffee shop and you owned a construction company, yes, we're both going to carry commercial insurance, but you're going to carry one built for the construction company. I'm going to build one that's built for a coffee shop. You don't go buy coffee shop insurance to run a construction firm, right? So What has happened is a lot of these landlord policies now are piecemealed together, patching a leaky raft, if you will, to try to accommodate short-term rentals. They write these endorsements or these small enhancements that give limited scope of coverage to you under that landlord policy. And because it's still limited in coverage, you're still paying a lesser premium than what you might see on the commercial side. So the biggest thing that we see is folks come to us and they say, I already have this policy through X carrier that says short-term rental on it. That's fine. If a tree falls on your house, you're still going to be covered. They're going to pay the claim. You don't have that business activity exclusion anymore. But what we're missing and what we're not looking at, or maybe the agent that you bought that through didn't relay correctly to the underwriter, is how you actually physically operate this home rental. Are you pet friendly? If you are, did they tell you about the limitations or exclusions around animal and dog bites in the policy? Do you have a hot tub? Did they explain to you that you don't have coverage for communicable disease, bacteria that somebody could get from using your hot tub? Did they talk to you that you're a lakefront property and that any injury off your property line in the use of that waterfront is not covered because the coverage is limited to premises only? So that's a lot of the big things that we see come in, especially with a waterfront property, is they have this limitation of premises only liability, and typically at a $500,000 limit, and they're offering canoes and kayaks and other things for the guests to use in that waterfront, and you effectively have no coverage for doing that within your business. And so that's where I really like to promote this industry moving towards thinking more about commercial. You should be looking at a commercial product and have it built to what you're doing and asking the questions around, does it cover X, Y, and Z amenity that I'm offering? Because if my guests become injured and sue me, how am I protected and for how much?
Yeah. And so what about working with a property manager, for example, and you have a insurance policy? When does it fall on the property manager insurance policy versus the individual homeowner's policy?
So
versus Airbnb versus air cover. There's just so many insurances that are happening at the same time. So I'm just curious, what takes the hit for what occurrence?
So there is going to be crossover from the manager's insurance, the homeowner's insurance, and any supplemental product like an OTA cover like Airbnb offers. Or if you purchase, or the property manager probably a lot of times has their own by booking damage waiver product or supplemental liability that goes into play. The homeowner's insurance on the physical asset where the business is being conducted is always going to be the first to respond. And then where there's additional gaps in protection, and this is where it gets into contractual requirements with your property manager around the why the property manager has to be listed as additional insured in those contracts when you sign up with them to manage your home. A lot of times, and almost always, the liability coverage for the property manager has a limitation or exclusion stating it does not cover liability, including property damage, to properties under management. So the manager's policy is to protect them and their business and their employees and their business machines and their E&O for hiring XYZ contractor to do work at your property. The homeowner is actually the business operator and needs to have their own insurance because the property manager is a third party to your business as the property owner. It's just if you hired me as a consultant, you are running your own business and I'm consulting to it. So you need to have your own insurance and I need to have my own insurance. It's the same relationship with a property manager and a homeowner. Homeowner needs to have business insurance that's correct to how they want to operate the property, and the manager needs to have their own insurance to cover them in relation to their contractual obligations to that homeowner at XYZ commission or percentage that they're taking.
Gotcha.
So there's going to be overlap. There are cases that we've ran into where there's a multi-million-dollar lawsuit and there's negligence found not just on the property owner, but there's also negligence found on the property manager for not doing something within their contractual duty to the property. And so both insurance get hit on that claim.
Gotcha. And so let's talk about, once again, we mentioned 3 products in the beginning, and the per booking product that we mentioned is Wavo. So let's talk a little bit about Wavo. Where's the differentiation between Wavo and proper homeowner insurance, for example?
Yeah, it's a great question and a lot of confusion. So any supplemental damage protection, whether you rely on Airbnb or you go out and have your own, like a product through Wavo. There's a dozen companies like Wavo out there in this space that do damage protection per booking. Think of that more as it's covering sub-deductible items. So if you buy a policy from Proper, and let's say you have 5 homes, and all of your homes, you go with the $5,000 deductible. You like that deductible, you can float the first 5. What you're looking for in a damage waiver product is to cover the small things that get damaged by a guest. Wavo and its competitors are not going to come in and pay the first $5,000 of a tree falling on your house during a booking because it's not damage caused by a guest. Think of it this way. I have a $5,000 deductible. Guest comes in and they destroy a $3,000 couch. The damage waiver product is going to pay to replace that $3,000 couch. So you're not paying out of pocket for that, nor has it exceeded your deductible on your regular home insurance to trigger a claim on that contract. Even if you have a lower deductible, like $1,000, you're still going to end up with broken chairs and soiled sheets and things like that get damaged. And you can leverage those products to help offset those expenses because it's paid for by the guest at the time of booking. Instead of the guest giving you a security deposit that you then refund at the end of their stay or withhold because there's damage, you're simply telling the guest, oh, you broke the TV, we'll get a new TV, don't worry about it. And then you're putting that into the damage waiver product to get you that new $1,000 TV or $2,000 TV. And then also, they're really great tools to leverage reviews. So instead of you fighting with the guest over who did what and was it accidental, was it malicious, thus resulting in potentially negative reviews, you're simply telling the guest, don't worry about it. We have it taken care of. Enjoy the rest of your stay. We'll get a TV over there ASAP.
Gotcha. I see what you mean. So let me ask you this, right? I think you alluded to it a little bit, but I want to touch on it more. The idea of, let's say, air cover, for example. Why use air cover and Wavo or another damage per booking product? What's the reasoning for that? Or is there no reason to do it?
Yeah, the damage waiver for some people, there's no reason. They simply go, I have baked it into my pro forma. I'm going to have these small damages come up through the life of the property. And it's just, I have a slush fund of X thousands of dollars to take care of it. I put a percentage of my revenue every year into that. Some years I have no damage. Some years I have a lot of damage, and we just take from that pool. Other folks, they don't do that, and they either are taking security deposits, relying on air cover, which can be tricky. Some folks have good luck with it. Some people have terrible luck getting money out of that. So using a damage waiver product is a way to get away from the control of the online platform, especially if you have your own website and stuff. You need to have a product put into place so that you can navigate that. It's completely optional at the end of the day, Patrick. You don't have to do that if you don't want to, but there's those options out there to try and offset those additional expenses, and at the end of the day, it's paid for by the guest. It's baked into the booking fee. It's what they're paying per night to stay there, and a lot of times you can make additional revenue off of it. So the carrot dangle is I can upcharge this above the base premium that's due to the provider, and I can make an extra $30, $40, $50, $60 per booking on my properties by having this built in to my booking fee. And then if something does come up.
Oh, sorry to interrupt, but do you mind explaining how people make money on damage waivers?
Yeah, virtually all of them do this, but speaking directly to our company, Wavo. So if you're have to pay Wavo, let's just say $25 per booking on a $3,000 damage waiver, you can just charge the guest $25 extra and you make there's no additional money because that $25 goes straight to Wavo. Or you can upcharge it to $65 on your booking, and now you made an extra $40 over the course of that stay, and you get to keep that difference. And so we see a lot of property managers or larger portfolio hosts using that so they can simply make an extra few bucks on top while still having coverage and protection for these smaller things that come up. So in the eyes of somebody might hear that or go, I'm doing that myself, but I don't have a back-end product. Right now, that's perfectly fine until damage waivers start to get regulated by your insurance commissioner on your state. There is a real opportunity that they could come in the near future and say, hey, we should be collecting tax revenue off of this. You're charging the guest $50 for quote unquote insurance, if you will, but you're not remitting taxes. We want our tax. So these companies are out there, so you're not doing that yourself, and you're using an actual licensed backer on it, so you don't get, hopefully, in trouble. Maybe the insurance commissioners never do it, and you can keep doing that. You can continue to operate that way if you are until that time comes. So knowing that these options are out there is still important. It's important to investigate those opportunities. And yeah, you pay a small fee per booking back to the carrier, but you can also, again, upcharge that and whatever dollar amount to help give you additional revenue into your business.
Yeah, and that makes sense. And with the whole self-insurance, I know there's a few companies that do it, Vacasa being one of them. What have you seen with self-insurance? Because there's a lot of rhetoric out there about doing it and how you barely have to pay out, and it's a great way to make extra money. Curious, what's your take on that?
Yeah, I look at it in the sense of preparing for the future, of getting away from that mentality, because if the insurance commissioners start classifying this as a tax remittance item and you have to be a licensed insurance professional and use a carrier, use a State Farm or an Allstate, which they don't participate in any of that, but you have Wavo, you have Safely, you have Rental Guardian, there's a ton of companies out there. You have to use somebody like that, because every time you sell or market insurance and it's not insurance, it's upwards of a $25,000 fine per incident, per time that you do it. I look at it as more as get ahead of it, start partnering with something like that, push that away from you doing it, push it away from you having to manage and navigate it, push it away from you having to report it, and give it to a company that has to follow all these specific legal guidelines behind it. That way you don't get yourself in trouble if it ever comes down to that. As we stand right now, today, in America, that is not the case. So if you are collecting damage waiver money at $50 a booking and you're just throwing that $50 into an account, and sometimes you need to pull from it to get a new table or fix a TV or do whatever, it's fine. You can do it. I'm just saying that there's going to come a time where this is going to get caught by an insurance commissioner, and they're going to want to collect tax revenue on it, and you're going to need to make a change very quickly. And so you can get ahead of this now by just partnering with a company and building it into your process, still make revenue. You're just giving some of that up to put it to a loss fund with an actual licensed insurer of those guest bookings.
Gotcha. That makes sense. Yeah. So I think we've covered per property insurance. We've covered per booking insurance. I think the next type of insurance is for the people that are co-hosting, even the idea of co-hosting for one other person, or property managing for that matter, whatever term you want to use. Do you have to, let's say you're a co-host, do you have to have commercial insurance if you're doing one you're co-hosting for your uncle or something like that, or a friend of yours? I'm just curious your take on that.
Yeah, you can get it pretty cheap. You can get yourself $1 million in general liability and $1 million in errors and omissions insurance for $1,000, $1,500 a year with one property. And then as you expand, you already have the insurance in. So there's a lot of folks who like to think, I'm not a property manager, I'm a co-host, so I don't need insurance. And that's not the case. They really fall under the same umbrella, if you will, of what you're doing business-wise in this space. What you also need to do as a co-host, and where the very basic starting point is when you engage in co-hosting with anybody, is that you're named as an additional insured on their policy for their piece of real estate. So what we see happen a lot is we see folks start in rental arbitrage, right? And they master lease a condo or two, and then they get their feet wet in the industry with that. And then they go into co-hosting because you don't need any specific licenses and stuff in that case. So they pick up a handful of co-hosting clients, and then this stuff really starts taking off, and they go to a couple of conferences and they start to learn more, and they go, all right, I'm going to go get my state real estate license as a property manager, and I'm going to have a website, and I'm going to start bringing on clients and making a commission on this stuff. And then they graduate into the formal property manager aspect. I think that's similar to what you did, Patrick. You got into the space and graduated into this, and now you're a full-fledged property manager and acquiring businesses. And it grows in that. But the thing is, if you start as a co-host, you still have risk. You still have liability that you need to protect for yourself. You're going in and out of that property. You're scheduling cleaners. You're probably helping schedule maintenance. You're communicating with guests. So you could very easily be tied to a lawsuit. So the two things you need to do is be additional insured on the home policy, as well as go and look at your own insurance like Worcester. Worcester can do that for you and get that $1 million in general liability, and E&O, or professional liability, is another name for it. And it starts at like $1,200 or $1,500 a year. It's fairly inexpensive.
Gotcha. And can you talk about Worcester just in general, or property management, commercial insurance? What is it? And what's included in that? Like, maybe talk a little bit about errors and emissions. Just give an idea of what's needed for insurance in the co-hosting property management space.
Yeah, so the basic part of property manager co-host insurance is going to be the general liability, which covers bodily injury and property damage that you have negligently caused. So that's the basic start of it. And then professional liability, or errors and omissions, that those two go hand in hand together. E&O insurance, or professional liability, is going to be you're getting sued by a client for improper advisement, right? So to keep it on insurance topic, Patrick, let's say I'm your homeowner, and you said you need to call Jimmy down at XYZ insurance office and they'll get you insured. They sell the best product. And I go and buy that product, and my home burns down, and it's not covered because it was the wrong insurance at your ill advisement to me on that, I can turn around and sue you. And that would be an E&O or professional liability claim. And it can happen with all other types of things. You could tell me to do this or that at my property, and then it results in a lawsuit that causes me financial harm. I can turn around and sue you as your client for improper or ill advisement, and that's E&O. So a lot of people think errors and omissions, like malpractice for a doctor. It's very similar. Yes, but you still need it as a property manager or a co-host because you're providing the advisement to the client. And then from there, it builds even more on what you might need. Do you have a commercial auto? Do you have additional facilities that you've purchased, like a laundering facility that needs to be insured? Do you have employees? Do you need work comp? Do you need employee discrimination coverage? Do you need on and on? There's a lot of stuff that can be built into the package, really based on what you're doing as a business and the size of your business, and so on and so forth. So not everybody is the same in what they need built into that package. There's a lot of remote managers who live here in Bozeman, Montana, but they're managing property in Florida, and they have a team. They have great 1099 contractors for cleaning and this and that and the other thing. So they really just need the general liability and E&O component. There's other large managers that we all know across the U.S. who have large buildings and big teams. You see their cars driving up and down the road in your area with the nice vehicle wrap on it, and they're going from house to house doing turnover and maintenance. So they probably need a much more robust package at the end of the day. So it's hard to nail down, this is what you need to go and buy. What you need is the general liability and the E&O insurance. Yes, 100%. Anybody managing properties needs to have that. And then from there, you can build onto the package as your property grows. And we all own computers, we own phones, we own vehicles, so you probably need some facet of property coverage built into that as well. And that's all.
The office too.
Yeah, the office, the lease, whatever. Yeah. And so that can all be insured on the manager product for operating your business.
Yeah, and Worcester is a new product that you guys came out with. The big difference that I've seen, because we already have general liability or commercial insurance, but the one thing that I noticed that was different about yours is obviously, once again, it's specific to short-term rentals and has all these nuances that maybe another product that's more general towards property management doesn't have. On top of that, I've seen that you guys bill per property.
Yeah. So it's a per property billing that was built into Worcester. So there's, again, just like the home products, there's a lot of different stuff out there. There's even more limited for property managers. But all the property manager insurance products out there are meant for hotel, motel, or long-term rental management. It's not specifically built for the short-term rental market. So it took a lot of time. It's been in the works for a few years and finally rolled out earlier this year in 2025 to have this specifically built product through our company Worcester that's specific to the property manager game and short-term and mid-term rentals. One of the biggest faults with the current business insurance market, especially for managers, is that all the ratings are on revenue and it's not based on the amount of risk that you actually have. So if I manage 5 luxury properties and Patrick, you manage 20 condos, our revenue might be the same and we're paying the same amount of premium. Or my revenue might be higher with less properties and I'm paying a lot more in premium. And we just didn't feel that was fair. So we did it based on a property count. So you pay a flat rate per property that builds into what you're being charged for the liability and the errors and omissions side. And as your business grows, instead of doing these like super in-depth revenue audits at the end of every year, where you have to get all of your books together and send it to the insurance company, and it can take 1, 2, 3 months for your entire policy to renew because of that. It's simply based on how many properties did you manage last year, and did you grow, and do you have more properties on this year? So that makes it much more competitive from a price standpoint to begin with. And then to go a step further, because we know very intimately how insurance works in the scope of liability, when your property owners carry the right type of insurance product with you, the management entity or co-host listed as additional insured, Worcester is now going to give you massive discounts, up to 75% per property on your rate that has a commercial liability product with your management entity listed as additional insured. And the reason they do that is because it makes that manager a better risk. That manager has now taken the time to know and understand and educate themselves around the why on the homeowner's side of the insurance product, has educated their homeowners on the why they need to have that type of insurance product. So when that homeowner goes and buys that product, you directly benefit as a manager because the first to respond on the liability is always the insurance for that location. So what is more than likely going to happen is the Worcester product is not going to end up responding in a lot of those cases. Now, where this becomes different in the standard markets for property managers is they know that as well, but they're not going to give you a discount for that because they just want to collect their premium and hope they never have to pay a claim. And that's the fundamental difference with our companies and these other companies that are out there is if you're going to take active steps to managing risk better, you're going to pay less in premium at the end of the day because you're a better risk.
Yeah, no, that makes sense. Curious, like when you go into these insurance policies and products and all this, right? Let's talk about a scenario, right? Let's give a few and get an idea of what is needed for each scenario and what pays out, because I know there's a little gray area. Let's say somebody slips and falls on the property. What's happening and who's getting sued? Curious, can the property manager get brought in on that? Is the homeowner insurance policy covering that? Is the property management insurance? I'm curious, like what happens, or does air cover come in? Let's say it's on Airbnb. Like, what's the thought here?
Yeah, so in our experience is everybody tied to that property gets named in the lawsuit. So if it was the property manager who took the booking through Airbnb, you're going to see Airbnb tied to the lawsuit. You're going to see the homeowner or their business entity. A lot of homeowners have LLCs set up. Their LLC named a lawsuit and the property manager. And the reason they do that is because the injury attorney wants to get copies of everybody's insurance policy. And then they're going to open up the process of discovery between all of it to see who is negligent and who is paying. So what ends up happening is that everybody submits the contract because they're legally required to when that demand letter comes in. And then it's the insurance company's duty at that point in time to do their job to try and get said person out of it because there's not negligence. They want to prove you not negligent and that person slip and fall. So it could come down to property owner, you're negligent because you didn't put a handrail in on these stairs. And so that's who they're really going to go after, is the owner of the property for not putting handrails on an interior staircase, for example. Air cover, sometimes we'll just come in and say we'll pay $1 million or we'll pay $500,000, and then there's a settlement and nobody else's insurance gets hit. That's few and far between what we've seen in our experience. So if you're with proper, then proper comes in and says, okay, we're defending not only the property owner in this case, but we're also defending the property manager. So we need to start asking questions to the person who was injured around how and why they got injured. Were you drinking? There's a handrail here. Why didn't you grab it? Were your hands full? What type of shoes were you wearing? Did you see the sign here that said, watch your step when you walk outside to the pool? All of these things to try and pull you out of the lawsuit, or make that lawsuit not $1 million, but maybe a few $1,000s for a broken ankle or something like that. Now, if there's direct negligence to the property manager because they did something wrong in this sense, then the property manager's insurance is more than likely going to be engaged through the process as well. But ultimately, just like full circle in this conversation, it's all going to come back on the property owner's insurance to start with.
Gotcha. So the most important insurance you can have is your property owner's insurance.
Correct. And every manager, if you're managing one property or 1,000 properties and you're listening to this, you need to make sure that you have on file every single owner's insurance policy with you listed as additional insured on it. If you do not have that certificate that shows you as additional insured, that property should not be online, should not be available to a guest until you get that piece of paper.
And explain that a little bit more just for everyone. So let's say you're not additionally insured.
Yeah, if you're not additionally insured as the property manager, then you have a massive gap here. Because if you're named in a lawsuit and you're not protected under the homeowner's policy as an additional insured, and it's not something, again, that's covered on your management insurance, then you're paying out of pocket. You're paying out of pocket for that legal defense, and you're paying out of pocket for any damages due to negligence if it comes up to that.
Gotcha. What if you require it, but they never end up doing it? So you put in an agreement. Can you sue them for the negligence of not doing it when it was part of the agreement?
No, it turns into a civil matter over the contract, which just ends up costing a bunch of money. And if I was a property manager, I would probably forego that. End up costing more money than I probably have to settle for. What I'm trying to get at is,
yeah, agreed.
I'm onboarding a new client tomorrow, let's say, and they're chomping at the bit to get their lakefront property up before the summer really kicks off, because that's when they're going to make the most amount of revenue. And I'm sitting here tapping my toe like, where's your insurance? Where's your insurance? I need to see that you have $1 million in liability and me listed as additional insured per my contract with you. I'm not going to list your property until you do that. And those are the conversations that I don't think people like to have, but it needs to start happening more and more. We work with a lot of property managers who operate that way. And we'll get a phone call that says, I've been struggling to find insurance and get my manager listed as additional insured, which if you're an individual host and you call the company you work with for insurance and they won't list your manager as additional insured, that's red light number one of this is the wrong product that I have on the home. So we get that phone call a lot, and we end up just going to, it's super easy. We do it automatically. Who's your manager? It's XYZ company. They're probably already in our system because we work with tens of thousands of property managers already. We add them to the policy and we generate what's called a COI, or certificate of insurance, that shows $1 million in liability, the policy number, the property address, and at the very bottom, it shows XYZ management company as additional insured. And then that host, or not that host, but that property owner hands or emails that piece of paper to you, the manager, and then goes, here's my insurance. And you go, great. That was the last thing we had to check off the box. We're making your listing live tomorrow. fantastic. But until that happens, you need to withhold listing their property until you get that piece of paper where you're as an additional insured on their policy.
Gotcha. Cool. And full circle. I do want to get into the last three questions. We do this for every episode, and it's going to be no different for you. So I just want to dive into this. The first one is, what educational resource do you think has been instrumental for your life in all facets? It doesn't have to be short-term rental related, doesn't have to be insurance related. I'm just curious, is there anything that really stood out to you from that?
Yeah, I'm not a college grad. I dropped out of college 2 years in and just went to work. The growth of the internet has been great overall in my learning experience, not just insurance related, but just overall business facets. The biggest piece of advice I was given, and by an extremely successful friend of mine, was never be the smartest person in the room. If you're the smartest person in the room, it's time to find a new room to go to, because you're always going to learn something when you're not the smartest. And I think that's played a big role in my life. Not just here in work. The ownership team here is very wise. They've been doing stuff like this for a very long time. So I've learned a lot from them, but even just in my own inner circle, having people there at my disposal who are way smarter than I am, so I can go and ask that question or seek advice, and they give it to me, and then we can implement that into the next day to be better ourselves.
That's awesome. So it's not even about a podcast or a book, it's just getting in the right rooms.
Yeah.
Cool. Second thing, let's talk about insurance in general. Let's say that I like to build out these scenarios. And so for you, Nick, you bought yourself, let's say, I don't know what you're into, but let's say you buy yourself a lake house, big time lake house, $4 million. You're going to list it on Airbnb or in short-term and list it on other sites as well as a short-term rental. But curious, what insurance policies are you getting?
Yeah, biasly, I would be buying the proper insurance policy.
Okay.
And that's really just because I've seen so many insurance policy, and you can just tell me the name of the company you're going with, and I can at this point tell you what's probably more than likely not covered. So I would spend the additional money on that first. I would for sure go with a damage waiver product, especially on a home that big, because small things turn into big things pretty quickly on a sizable property like that. I would put more focus on ensuring my revenue and making sure my revenue coverage is correct, because a $3 or $4 million property, if I'm shut down for a few weeks, the impact to my revenue is much more substantial than a one-bedroom beachside condo in a lot of markets. And so not skimping on paying additional premium to make sure my revenue's right, so I can pay that note, I can still pay those property taxes, those ongoing utilities during that shutdown period. And then I would go lakefront, $2 million minimum in liability coverage as well, because I'm probably going to have canoes and kayaks and a dock and other things for those hosts to use, or those guests to use, excuse me. And when I have a property that big, I just have a bigger target on my back if somebody gets injured.
Nice. I love it. Is that in the plan already? It sounded like you already have the game plan set up for this lakefront property.
Yeah. I might need to get a pay raise to drop $3 million on a home, but if I was in that position, that would be that would be the go-to. You want a property that's attractive, and you got to tread that line of, are you going super high end, or are you going economy, right? And you can still do an economy lake house and make a killing, but the more money you make, the more you become a potential target for these lawsuits. So it doesn't matter if it's a $3 million lakefront or a $300,000 lakefront, the risk still ends up being the same, but your financial impact in a shutdown period or a lawsuit can be greater one way or the other.
Yeah. So let me ask you this now. Last kind of question on this idea is, what does the future of proper look like now? What do you got in the books for that?
Yeah, so at this point, we're so well established in the industry. We've hit our goal. When I first joined the company, it was, how do you become Kleenex? How do you become Band-Aid? Where there's 100 different brands of Band-Aids out there, but there's only one brand Band-Aid. I think Proper's done a good job over the years in setting ourselves up. When we see people at shows, or I see people talking online, they're all saying, you need proper insurance. And So I think we've done good there. So moving forward, it's what can we provide and offer as additional enhancements to the property owner that's necessary. So over the years, we've added bed bug and flea coverage, we've added squatters coverage, we've enhanced certain parts of our product to provide more overall protection. We've partnered with other companies to provide deeper discounts to property owners if they're utilizing those resources. So moving forward, it's more about what does the industry want or need in an insurance product as an option, and then how can we make that happen? The other side too is we all know that property is getting more and more expensive. So we've recently been able to negotiate and expand our insured value offering up to 25 million. So for a long time, we weren't able to insure these big, huge single homes that are multi-million dollar properties. But effective, actually, I believe it was May 1, we can now go up to $25 million in insured value on our policy, which is something we've been waiting for a very long time. So the future here for us is to segue more into these very high luxury type homes so that we can be able to offer our product to that facet of home ownership where we used to not be able to do that.
Wow, that's awesome, man. And for anybody that's listening and wants to get in contact with you or understand more about Proper or any of the things that we talked about today, how can they get in touch with you?
Yeah, so the best thing is to go to the website, www.proper.insure. If you Google short-term rental insurance, will more than likely be the very first one that pops up. You can call us on our number, 888-631-6680, and you can get in touch with one of my team based on where your property is located to start the process of chatting about your risk, what you currently have, where we can build a product that's going to be a little bit stronger for you or a lot a bit stronger for you in most cases. And then from there, we can connect you with the other facets of the organization as well. If you're a property manager, likely you'll want to have a consultation with Worcester. We can do an introduction to you from there. You might also, as a property manager, want to know how to get more information about Proper into the hands of your homeowners. Myself and my team can work with you on that in terms of content, custom templated emails, co-branded material, however you want to navigate that. But yeah, the best thing to do is get in touch with Proper to start, whether you're a manager or an individual host, and then we can get you introduced to the other two companies if those are a desire of yours as well.
Cool. Thank you, Nick. I appreciate you sharing all about insurance today. Yeah, thanks, man. I appreciate it. And hopefully you have an awesome, I know we're just after Memorial Day weekend. Hopefully you had an awesome Memorial Day weekend and are ready to go into the next week. So
yeah, thanks for having me, Patrick.
Of course.
I always enjoy coming on and chatting anytime.
Absolutely. All right, talk to you later.
It's same.
And that's a wrap. Thank you for listening to the Patrick Real Estate Show. If you found this episode helpful, please give us a follow and leave us a 5-star review. Your support truly means a lot. And connect with Patrick in the show notes below. Until next time.